So let's get right into it. We're going to give you a short video on a recap of the week. Yes, I talk like a 5-year-old. What's up, guys? It's Alex with the AM Show, back for another really quick episode. Unfortunately, Mike is still out of town. He will be back for Wednesday's episode. So let's hop right into today's short episode and talk about last week's performance in the stock market. So very, very interesting week. We had a lot of negative news, but stocks still seem to rally. So for example, we had unemployment numbers come out on Friday, and unemployment has hit levels that we haven't seen since post-World War II. Unemployment hit 14.7%, and that equates to about 20.5 million Americans without jobs. So when they say essential workers, they mean just essential workers. However, despite this news, there's still a lot of positive market sentiment and a lot of people still investing and feel very bullish about the stock market. Indexes continue to rise throughout the week, and we didn't see any signs of slowing down. However, one important thing to note was the S&P 500. They continue to rally, but their volume was not nearly as high as it normally is. So that shows me a bit of a bearish divergence, like I mentioned in last week's episode. What this could mean is that we're due for a market pullback at any time, but it's not certain. We could see a V-shaped recovery like everybody is talking about. Furthermore, there are some indicators showing that the bulls and the bears are split about 50-50. And what this could mean is that the market could go any which way at any given time. So let's just monitor our positions closely. So despite all this craziness in the market, let's jump into how the indexes actually did. So the Dow, we had up 2.56%. The Russell 2000 up 5.49%. The S&P 500 up 3.5%. And then we had the NASDAQ up 6%. So a very good week all across the board. We believe this came from the Fed supporting the bond market and giving investors a lot more confidence, along with a lot of stimulus money in the market, and the Fed overall doing whatever they can to make sure the economy recovers as quickly as possible. Quick side note here. The Fed actually, I believe, learned from the 2008-2009 crisis, because back then they waited much too long to get these stimulus packages out, and we saw very detrimental effects to our economy. Therefore, what they tried to implement this time is get out the stimulus checks as fast as possible, give out stimulus checks to as many people as possible and businesses, and overall just quick to action. Because of their actions, we see a lot more positivity in the economy, and we could see a much quicker recovery as well. However, I still think there are some very skeptical people. I, for one, am still skeptical, and the reason why I believe this is because we have about 75% of stocks still below their 200-day moving average. And what this means is that that moving average line usually acts as a line of resistance. So once our price levels get near that, they could see a little bit of a sell-off, and we could see not as strong price movement in the next coming months. As I mentioned before, there are a lot of people that are also very bullish. A lot of people are confident that once the virus is cleared or gotten rid of, I guess we could say, that a lot of people will be rehired. So only time will tell. Just because this metric shows us that we have most stocks below their 200-day moving average doesn't mean you can't invest and invest well. What it means is we have to pick stocks that are exceptional. We have to pick companies that are low on debt and are generating cash flow right now. If we go take a look back on Monday's episode, we're going to realize that most of our picks from this week actually performed quite well. Let's go over them right now. Just as a little refresher, our picks of the week were Facebook, Carvana, SM Energy, and Kroger. And 3 of our 4 picks this week performed quite well. So first, let's talk about Kroger. Kroger was up about 4.5% on the week. Pretty solid, nothing exceptional, but if you invested on Monday, you'd still be happy. Next, we have SM Energy. We shorted them, as you remember, and unfortunately, they moved against us and they were up about 8% this week. But we got out of our positions quick, mitigated most of our losses, and we were fine. However, we believe we were wrong because the market timing wasn't quite right, and markets just seemed to rally despite whatever was thrown at them, so our mean reversion strategy just didn't exactly pan out. Next, we had Facebook up 4.98%. Pretty solid performance from them. I think they're a great company. I'm going to continue to monitor them for the future. And our last pick of the week was Carvana. They performed exceptionally well this week. And if you would have invested after Monday's episode, you would have seen returns of 31.7% if you would have held throughout the week. The stock continued to rally all 5 days and didn't show any signs of slowing down. I really like Carvana and I get to see some great things out of them in the future, so we'll keep an eye on them. Guys, that is about it for today's episode. Markets are pretty volatile right now. Markets are going kind of crazy, going against what it's supposed to be doing. So I would invest in some solid companies. I would watch your position sizing, and I would ultimately just stay patient. I believe if you follow those 3 guidelines, you can still be successful in the markets right now, even if we have a little bit of a pullback. And for today's last segment, I'm going to talk about Elon Musk. I've been talking about him a lot lately, but he loves Twitter and he gives me a lot to talk about. So this weekend, Elon Musk tweeted that he is upset with California's policymakers and they're keeping the Tesla factory shut down. So what he was talking about was actually taking the factory and moving it to Texas. So if you're feeling a little speculative, I would recommend taking a look at their stock on Monday. However, I personally will be sitting out. And that's about it for today's episode, guys. If you could do me a favor and go down there and click the like button, if you guys could subscribe and share with all your friends, all of your support means a lot to us. We will be right back on Monday with our picks of the week, and hopefully we can pick another stock to make us some serious gains.